Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. This is Tuesday, the 3rd of January, 2023. Happy New Year to you all. I'm Daniel Lam, your host for the podcast. I still remember what happened in December 2018 when there was heavy sell-off in US equities in the last 2 weeks of the year. Fast forward to December 2022, it was really another story, especially for the Hong Kong and China equities. Now, we discussed in the podcast before that Hang Seng index may be able to hit the key psychological level at 20,000 before year end, and so it did. A combination of further positive news on property companies being able to access the stock market, plus, of course, further reopening in mainland China, has injected more bullish sentiments into the markets. Now, the key question here, in many of your mind, is this time to add more, or are we approaching the peak for Hong Kong and China equities? Well, let's put things into perspective. The speed of removal of COVID restrictions has really taken the markets by surprise. Because the street was expecting removal of most of the restrictions by the second quarter of 2023, and not by the end of last year. So what that means is that the recovery in GDP growth is likely to be brought forward by 6 months. Recall that our previous estimate on total consumption would be adding 4% to 4.5% to GDP growth in 2023 versus an estimated of 1% in 2022. Now, this estimate would be higher now. On top of that, if urban households spend half of their excess savings accumulated from 2020 to 2022 in 2023, this could add another 1% to annual GDP growth. In terms of the Hang Seng index, breaking above key resistance at 20,000 has paved the way for the index to test the key resistance level at 22,000. Now, it is possible that we may see strong moves in the first week of trading this year, because most of the fund managers were on holiday when the news of further reopening came out. So it shows in the volume. The volume in the last 2 weeks of last year was roughly 40% of the previous weeks before. However, note that the magnitude of the up moves may slow down somewhat, because we have already gotten many of the quote-unquote jumbo good news or low-hanging fruit that people were seeing over the last 2 months of 2022. So, investors, they may consider buying the Hang Seng index at the current level, aiming to lock in some profit if it does reach the 22,000 level. Sectors that we like are primarily the internet consumption sectors, i.e. communication services and consumer discretionary. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.